And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs. Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday, so you're going to get your weekly Manhattan market update. But Johnny, before we get to the data and the update, I want to introduce our audience to the new UrbanDigs website that is going to be previewing tomorrow. And I just want to spend a minute. We've been working so hard on this. We've been listening to all of your feedback on what you like to use UrbanDigs for and what you want us to provide to you. And we have taken all that and we have consolidated it into this update, Johnny. And I just want to go over it real quick. First and foremost, it is all about education. And I want to just introduce to those of you that do not know, we have classes, Johnny, workshops, sessions, strategy classes every Tuesday and Wednesday at 11 o'clock for 30 minutes. If you're not part of those classes, you could reach out to me at noah@urbandigs.com and I will get you connected to those classes. If you're a user of UrbanDigs, you have access to that. That will now be on your dashboard. I want to introduce a new series, Johnny, that we are introducing to everybody called Macro Monday. And we're going to start that on Monday at 11 o'clock. And that is going to be a consistent show. And we're going to go over all of the macro forces that we believe you need to know that might ultimately impact the Manhattan markets. And if I could just scroll down just a little bit, it is all about content. It is all about research, and that's what UrbanDigs is, Johnny. If I had to say what are the two things that we do research and we do technology. So that's what this new site is going to be all about. If you use us for technology, just click on the technology tab and all of the tools that you used to see on UrbanDigs are right there. You might see something new, the UrbanDigs pricing wizard. That is a brand new, such a cool tool that consolidates CMA, comps, and building activity, building trends, building matrix into a whole all-in-one flow. It's really cool. I'm really excited, Johnny, and it's all coming tomorrow.
Yeah, and I'd just like to take a moment to thank all of you who've been watching us on YouTube for the last 3 years. One of the things we're doing with this new update is consolidating our videos onto the site. So if you've been seeing us at YouTube, this is going to probably be our last one on YouTube of the weekly update series. The rest of them are going to be, we're going to continue to do these obviously, but they are going to be on the site. So you'll have to log in and view those going forward, but we're looking forward to welcoming you on the site. And we've put a lot, as Noah said, we've really put a lot of love into this. There's a lot of new stuff here. So it's really cool.
Yeah, it's a long time coming. We're very excited about it, but let's now get to the update that you're hopefully waiting for. Johnny, I'm looking at Manhattan supply, 6,370 things trying to sell. Looks like it's ticking higher. Show me that chart.
Yeah, and we've seen a rising trend in supply over the last few weeks, and that trend remains in place. It is not taking off like a jetliner, that's to be sure, but it is steadily increasing as you would expect this time of year.
Yeah, and I just want to make a note, Johnny, that we like to look at that net deficit, net supply on the ticker and see whether or not there's a force pushing supply higher or lower. And for the longest time, it's been at a net deficit that's been containing the move in supply. That's why we really haven't moved up much. But over the last 5-6 days, that has flipped to a net surplus. So now supply has the ability to move higher. It's unleashed, so to speak. So we're going to keep an eye on this. We're going to see how high it goes, and we'll report on that. Let's shift over to Manhattan demand, Johnny. Pending sales, 2,453. Show me that chart.
Yeah, for the longest time, we kept wondering about when pending sales would flip. It finally did about a month or so ago, mid-February. And it's the uptrend now in pending sales is sort of established, and it's increasing. We're up 6% from the last week. So as you say earlier, supply comes on and then they go into contract sign. They start to go into contract sign phase, which is a phase we had not been in for a long time. So yeah. I'm interested to see how high this pending sales measure will rise over this active season.
And I just want to say congratulations to all of those buyers who put bids in back in December when pending sales was going down and at the bottom and deal volume was much lower. That is the time to put those bids in. Now you got liquidity coming straight back. Deal volume is up about 50% in the last 30 days. That is a notable pickup. Sellers are probably experiencing it. And if sellers are experiencing it, Johnny, they're not going to give buyers as much leverage as if there was no liquidity. So that's the point. So if you're a buyer right now, even though you're looking outside and seeing a stock market that's doing weird things, we're seeing liquidity come back over here, Johnny. Let's take a look at the weekly, see if there's any clues over there. I'm looking at supply, 439 things in the last 7 days. Show me that chart.
And, when you look at that weekly supply number this week at 439, which is an increase over last week's of 429, which was a big jump from the week before when we were in the 300s. So we've had a couple of twin tower spikes here. It's a little bit interesting to see that sort of jump in supply, but you talk about that liquidity aspect, and Manhattan volume and it really needs that supply to keep going forward. So it's healthy to see the supply come in, but the spike in supply like that is a little bit interesting to me.
Yeah, and we'll see how long it sustains that. And we got, 2 more months, Johnny, right? It usually goes to about May, and then June, July, it starts to go down. So we'll see where it goes from here. Let's shift over to demand. Contract signed, 259 things, up 11%. We're starting to get some good numbers there, Johnny. I multiply that by 4. You're over 1,000. John, show me that chart.
Yeah, certainly the pace is good. And when you look at the trend, from the January 15th low, we're certainly well above where we were in January, and that we're on trend for a healthy active season here. It's certainly nowhere near where it was 2022, 2021, but we're above 2019 levels. We're above where we were 2020, right before the pandemic hit. So in terms of activity, this is a healthy market right now.
Yeah, I would agree with that. And I just want to point out to you what I'm talking about with this surplus. You got 439 things coming on, and now you got 259 going off, 129 going off. That is less. That is less on a weekly basis. And if I look on a monthly basis, I got that same phenomenon going on. If I add up contract signed and I add up off market, that is less than what is coming on a monthly basis. So that's what I'm talking about. So supply is unleashed, and you might see that number start to rise, and we'll see what happens. Let's move on to the chart du jour. Everyone's talking about rates, Johnny. You whipped up this nice little chart. Why don't you explain what we're looking at here?
So really what we're trying to do is, get to the bottom of, well, how are rates affecting this market? So that blue line is what the average rate is, jumbo rate. And the red line is the number of contracts signed on a monthly basis. And honestly, no, you can see clearly that as rates skyrocketed, mid 2022, the number of contract signs dropped. But if you take that moment in time and then you apply it to the moments in time before that, it almost seems like noise. So that to me almost seems like a coincidence. And you look back, in fact, you can see those 2 black dots, which I added on. That's February 2019. And you can see then that rates were nearly 200 basis points lower than they were today, and contract signs were lower than they were in February this year. So rates are not all there. In my thesis, Noah, is that are rates part of the equation? Certainly. Are they the absolute beginning and end of any equation? Absolutely not. So this market is going to there's so many cash sales that this market's going to kind of do its thing regardless of where rates are. Certainly they're a qualifying factor, but they are by no means the main factor.
Yeah, interesting. And this is the talking point of today for markets. So let's play devil's advocate here a little bit. This is what I see. I'm going back to February, definitely a different period of time. February was kind of the bottom of our markets. It was a great time to buy, actually. We had what do we have? They had the rent regulations, right? We had the mansion tax in mid 2019 that kind of marked the bottom. But it is interesting to see that correlation. When you had rates that much lower, you were only doing 758 deals in February, and now we got rates so much higher, and we just did 826 deals in February.
Right.
So I see the point of what you're saying. I guess I can't get over the fact that rates were here a year ago, bounced to there a year ago, and demand was here a year ago and bounced down here a year ago. So to me, that impact was due to rates, and we did shift down. But again, I totally get your point, and you would think that with rates this high, you wouldn't have a bounce like that you would probably stay subdued. And that's the interesting point of what's going on, is that liquidity is coming back in a big way. And we're over near 900 now, guys. We're up here, right now. This is right now up here. So we are trending higher, and we're going to keep track of how long this all lasts for. But it's very interesting, and it all, at the end of the day, trickles down to our markets, Johnny.
Yeah, it's exactly right. And what I'm simply saying is that mortgage rates are a reflection of market risk. So
Yeah.
your decisions to buy or sell are not made on the mortgage risk. They're made on those what's happening in the background. So as things change in the background, the mortgage rates reflect that, and that's more of what's driving decisions.
Yeah, I would agree. This is going to be a talking point for the next 3 to 4 or 5 months as we get out of this cycle. Thank you, John, for whipping up that data. It's always interesting to see. I just want to point out before I do intros of who we are, which you guys hopefully know by now, take a look at this podcast with Bruce Martin at Still Lake Capital. It is really interesting. We did that on Monday. Yeah, we did that on Monday before all this craziness came in. So put yourself back into time and place and listen to that conversation. And I also would love if you guys could check out this seasonality versus the Fed terminal rate. I put that out 8 days ago, and now it's really kicking into high gear in the markets and the front page headlines. It's very timely. It's very important. John Walkup, thank you for doing all that stuff. I am Noah Rosenblatt. We're both from UrbanDigs. And don't forget, you guys got questions, we got answers. Please visit our forum right over here. If you want any of the documents that John put together today, it'll be right over here in just a few seconds. Other than that, this has been your weekly Manhattan market update, and we'll catch you next time.